You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster, Joe Benazzi from OptionPit.com, and Henry the FLOWMASTer SCHWARTZ from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for your bi-weekly dose of all things options related. Yes, it is time for the Option Block, what the cool kids call the old OB. My name, of course, Mark Longo from the TAG, OptionsInsider.com, as well as from the Ever Educational Network, on which so many of you are mainlining today. Remember, if you like what you hear, this show, anything else we do on the network, throw some stars, a like, a comment, wherever you get it. iTunes, YouTube, Audible. It's all available on all these places. Whatever they let you do. Throw some stars, a like, a comment. It does help new people continue to discover the show. And, of course, if you want to discover more content, and who can blame you, awesome pro Q&As, back-to-back. We had Scott Nations 2 weeks, Tony Saliba, tackling all your questions. These are people who have a lot of other things they could be doing. They come in to answer your questions because they like you folks. You want to take advantage of that? Options, oddities, live streams, giveaways, all sorts of fun. TheOptionsInsider.com/pro, the place to go. Dive deep into those fun waters. Over 113 just pro Q&As sitting there waiting for you the second you hit that button. It's insane how much content is. TheOptionsInsider.com/pro is the place to go. As we go around the horn and see who's joining us on the old OB show today on Thursday. First, let's go out to the quiet, the sleepy, the tranquil hamlet known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to Ye Old Show on a fine Thursday, sir.
And a fine Thursday it is, Brother Mark. Quiet, sleepy hamlet. What more could a man want?
What more could a man? I could see you in a Friar Tuck robe right now, just biting into a shank of mutton. Sounds like a good time. There's good times being had by all out there. Quiet, sleepy hamlet of St. Charles. As we go down a little bit further south, it's not quite as quiet or as sleepy. It's a booming town these days. It is Austin, known as the Southern Volatility Mecca these days, because RMC's going there soon, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, making a rare Thursday appearance on Ye Old Show. Mr. Meatball, welcome back to the show, sir.
Hey, thanks for having me. I'm excited to be here.
I heard a rumor that the Rock Lobster is out on vacation. What does the Rock Lobster do on vacation? What's a vacation?
He's fishing for stripers.
That sounds about right.
Thought I got to be honest. I thought when he initially texted me that, I said, Andrew, you're a married man. You should stay home. And then I read it again and went, oh, he's actually fishing.
Well, hopefully he's having fun. As we keep on rolling out to CBOE East, where we are joined once again, holding down the old CBOE hot seat by the FLOWMASTER himself, Mr. Henry Schwartz from the aforementioned CBOE East. Mr. FLOWMASTER, welcome back to the show, sir. How long before I get an email from CBOE Communications that there is no CBOE East?
We can say there's a CBOE East. There's it's a beautiful day in New York, and the market's up, and it things feel kind of complacent. So make what you will of that.
I'll have a whole bunch of fun here on the show as we dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, let's get into it. The FLOWMASTER let the cat out of the bag here. We are, shall we say, aggressively drifting north. More than a drift at this point. Coming into showtime, there were some concerns about inflation earlier in the week. Market kind of vacillating yesterday as a result. Today, it's like, nope. Last week, of course, we were all wringing our hands about Apple and China. This week, nope. All green on the screen, baby. S&P back north ever so slightly, but back north of the 4,500 level. Listeners, puts it up about 0.85% today. The Dow actually up nearly a full percent out there. And the NASDAQ up about actually just ticked the exact same amount as the S&P, 0.85%. An intriguing day. Apparently, all the concerns that were plaguing the market yesterday in the rearview mirror, onward and upward, as we've been saying for pretty much most of this year so far. That means all of our vol friends, as you might imagine, listeners, taking a bit of a hiatus today. A little bit of an early siesta heading into the weekend. VIX, when we kicked off the show, right at about a 13 handle, listeners. That puts it down almost a full point, about 0.9 of a point from the Monday show. VVIX, the vol of vol, after popping, getting back to close triple digits not too long ago, right back down again to an 84, puts it down 2 handles from where it was on the Monday show. VXX 2010, down about 0.9 out there. I finally got lured back in. I've been eyeballing it for a long time. I said last year I'm never going to touch this thing again. I finally got lured back in this week. What did I do? Maybe we'll talk about it later. Or maybe it'll be on oddities or vol views tomorrow. And then UVXY, we're at a 13, down also 0.9. It's like that magic number this week, 0.9 for everything. SVIX, 3320, up 1.4. Listeners, it is 0.05 away, 33 and a quarter. That is yet another new all-time high for this thing. Those SEP 35s, never been closer. And yet they are coming up against it, listeners. The clock is now ticking on our much-beloved SEP 35s. A day left. They've come so far. Could they possibly pay off? I mean, I won't put anything past them. I mean, it's up 1.4 from the Monday show. If we could do that again, we'd be pretty darn close. You got to do it all in 24 hours now. It's a lot to ask, but I don't know. These SEP 35s, it would be just an atrocity if they bought these things all those months ago. They waited patiently, and then we don't get there till like Monday. We get to 35.20. That would be a crime of epic proportions. Such is the options market. UVIX 270 down 0.2 of a point. And Vol Q, as we kicked off the show, 1570 down a little over a point, about 1.1 points. All right, the table is set. Let's go around the horn, the opposite of the way we started, and see what's cooking. Let's go back out to the aforementioned non-official CBOE East and see what the FLOWMASTER has in store for us today.
Sure. I mean, like I said, it's kind of a rosy picture for equities. I mean, we've had some, very sideways motion, right? We had a couple of days that were down, a couple of days that are back up, and, now we're back to kind of, VIX in the 13 range. I was lucky enough to go to another good conference. So, last week I had my Scholes and Merton brush with greatness, And this week there was a global volatility summit in New York with a different kind of crowd. It was all practitioners, and I don't think anybody in there was under $4 billion in assets under management. So a lot of interesting discussion about hedging. But what's funny is one of the themes was that the equity space volatility, meaning VIX and all the single stock vol as well, is awfully inexpensive, especially these are guys that kind of tend to look at the world from a higher level, fixed income and commodities and FX and equities. And they said, listen, in the equity space, the convexity is very cheap. So they were all kind of leaning long. In some cases, they're probably talking their book a little bit. But, we're kind of right back to it. We get these very short little blips up to, 15-ish, and then we're kind of right back down. So, like I said last week, I think, it's a pretty great stock picking environment. We see things moving 5, 6, 7%. So you got plenty of opportunities to pick your spots, get in, get out. It fits a lot of different approaches at this point.
You're rubbing elbows with luminaries week after week, sir. That's going to put that on your business card. And luminary elbow rubber out there. Our buddy, the once in future, Mr. Dr. Vix, also at that conference. He'll be joining.
He was there.
Yeah,
I saw Russell. He was great.
He'll be joining us on VolViews tomorrow to give us the lowdown, the full scoopage on all things Global Volatility Summit. So look forward to that tomorrow, listeners. As we keep going around the horn, we go back to the Southern Volatility Mecca. Mr. Meatball, sir, I know you weren't in New York for the Global Volatility Summit, so what was catching your eye this week in the vol space, sir?
The VIX just getting absolutely smoked. I got to tell you, I'm looking at the vol curve, and VIX, the SEP future is ridiculously cheap relative to where even the cash is right now, trading at about a 50-cent premium with 3 full trading days. So it's all the way down to 13.5. The spread between OCC and cash, though, is about $2.32. So you would say that's a little high. So the front end of the curve is just incredibly steep. And they're basically telling us, there is zero vol to worry about between now and the 20th now and when these options expire on the 20th, because the Federal Reserve isn't announcing till after that. So they're just coming in and absolutely smashing options. You have to wonder if the 13.5 calls for 45 cents are an interesting buy, or the 14 calls for 28. Things just seem really, really, really oversold at this point. And like the market's just saying nothing will happen.
It does seem like we are whistling past the proverbial graveyard yet again. There's some goodies, some nuggets to be mined out there. Let's find out as we keep on rolling. Let's go now back to that quiet, sleepy Hamlet. It is very much an Uncle Mike type of day, so he's fired up, listeners. Mr. Uncle Mike, sir, what is catching your eye out there today?
Well, it's a broad-based rally today. It's not like there is just one sector that's killing it, or like it was on our Monday show when we had a rally on Monday. This is kind of across the board right now, so it kind of feels like, to add to what Sebas and the FLOWMASTER had to say, if it's very at a point where there is a lot of complacency, then it seems like just a lot of people or funds are saying, okay, let's just buy some S&Ps. And everything's going up across the board that way. Now, we are north of the 4,500 handle again. And so I think that's a number that we need to continue to monitor as we go through this epic sojourn, as Mark Longo likes to say. We have that. Bonds have pulled back a little bit, but not a lot today. So we're just still kind of bottoming out to where the bonds have been at the lower level of their range for the year. And I think the main thing that's catching my eye today is the fact that this is a broad-based rally, which that's usually a sign of strength. But then we also have the complacency, which usually is not a sign of strength. So as with anything, who knows?
50% guarantee, or is it your 48% guarantee?
No, I go all out. I go a 50% guarantee.
Let's keep on rolling, listeners. Go on out. Let's fire up the old trade alert machine, see what's lighting up the markets out there today, listeners. First, let's go out to the major indices, see if they're liking themselves this pretty much naught but green on the screen today from a volume perspective. And the answer is pretty much yes. If you had shown me these numbers just out of context and said, hey, take a guess what time of day it was, I would have assumed we were much closer to the close because there's actually some decent numbers on the tape right now. VIX already 381,000 contracts on the tape right now. Listen, that's a fair amount of paper for especially this time of year because our ADV continues to fall show after show. We're back down to 607,000. Again, that's the ADV, or at least closer to the ADV we would expect last month, back in August. It's just kind of playing catch-up. Seems like we're going to hit that today, though, pretty easily. Again, closing in on a 400K already. Just early in the show now. SPY blowing the doors off. 5.35 million. The ADV, 8.13 million. So apparently there were some folks out there waiting for a little bit of upside on the screen again today to just dive into SPY because look out below or look out above really there. Just a ton of paper in SPY land. Usually this time of day, listeners, we're at 4, maybe 4.3 million. Maybe if it's a banger day, 4.5 million. 5.35 million, that's a lot of paper. The ADV, again, 8.13, so still looking robust there. The S, same deal, 1.75 million. That is a boatload of paper for the S right now. The ADV, 2.93 million, so it seems on pace to hit that. And again, just a year ago, if I had seen the S at this time of day, 1.75 million, I would have thought guy was on fire. Something crazy was going on. So that just shows you how much zero day has changed the game, listeners. Small caps also blowing the doors off, 689,000 contracts on the tape out there. The ADV, 823. A lot of paper out there in small caps as well. Let's check in on our old friend, Mr. IWM, see how it's hanging out right now. Up about 1.4%. So, again, a banger day, leading the indexes north percentage-wise, at least today. And the Qs saying, don't forget about me, 2.41 million contracts on the tape for the Qs right now as well, listeners. The ADV, 3.68 million contracts out there. All right, let's keep on rolling here. There we go. Let's keep on rolling. Let's go out to the most actives, see what's lighting up our collective tapes out there. Let's go to single names. Is it a good day for single names? The answer is kind of, yeah. 243,000. That's what it cost you to break into the top 10 today, listeners. So that certainly ain't nothing. That gets us to our old friend Softy. Once again, you might have thought, there's no more upside to be had in these names. They have wrung it all out, and you would be wrong because Softy today up $3.63, a little over 1%, trading $339.70 right now. And again, good for 243,000 contracts. And the number 10 spot on our countdown today, number 9, the artist formerly known as Google, Alphabet Class A, 247,000 contracts. Again, popping to the upside, 138.40, up about $1.68 out there today, and good for the number 9 spot. Number 8, it's Netflix, 278,000. Their CFO came out at a conference, I think, yesterday and just really scared the hell out of everybody, apparently, coming out saying the ad-supported business maybe not doing what people thought. Either way, the stock taking a bit of a hit since Wednesday. It closed right around 437 on Wednesday. It's 403.75 today, off nearly 40 handles or 9% over the past week, and most of that pretty much since Wednesday. So, yeah, he apparently spooked the hell out of everybody this week, and we're still seeing numbers out there today. Selling off another 8.5 handles today. So, no bueno for all the Netflix fans out there. Let's see on the year, though. Yeah, you're still looking pretty good. Stock was 224 a year ago. So 403.75, selling off about 40 handles. You'll take it, all things considered out there. And the number 8 spot today. Number 7, Chip Zone coming early today, listeners. It is AMD, 292,000 contracts. 107 and a third, off about a third today. And again, good for the number 7 spot. Number 6, the artist formerly known as Facebook. 310,000 contracts, trading 310 as well. 310.21, up about $5.15 right now. Man, just how much upside there is to be found in all these names. Still, it's amazing out there. As we keep on rolling to number 5, no upside to be found here, listeners. It is the former king of the apes. It is AMC. 312,000 contracts on the tape for them today. Trading $8.14, off about a dime today. It looks like earlier in the day, they drove it up to $8.91, so they have come off quite a bit. Actually, the high was $9.10, so they're off about $1 from their highs today. So intriguing stuff out there for AMC at the number 5 spot. Number 4, Keeping it in A-related names, we're going out to the Amazonians. 535,000 contracts there for number 4. 145.15, up about 30 cents today, so kind of a rounding error day for them. Range-wise, a little bit more going on. They got down to about 142.95, and the high was 145.75, so a little bit more action to be found there. Number 2, keeping it in the A-related tech names, listeners, it is the fruit company, Apple, just coming off their big iPhone and watch reveal this week. The stock up about $1.50, trading 175.69 right now. Good for 813,000 contracts. And the number 2 overall spot. That means number 1, once again, belongs to the reigning defending champ. It is Tesla. 1.42 million contracts out there. Still rallying again today after that rally courtesy of the Morgan Stanley love earlier in the week. $3.63 today, trading $274.95. On the week, it is up $23.60 on the heels again of all that love coming in on Monday from Morgan Stanley. And again, good for 1.42 million contracts out there on the tape. Earnings-wise, still got some data coming at you, listeners. Still some names popping off you may have heard of this week, including Oracle on Monday. Cracker Barrel, if you're out there for a little bit of country dining, maybe you want to buy a $200 rocking chair while you're at it. Cracker Barrel's got you covered. Today you had Adobe and Leonard Holmes. And let's see, yes, hot off the presses because we like you folks. Updated earnings move result, earnings season, and earnings trades reports for you folks because we like you folks. Right now, the season hanging out at 101%, just a couple of points north of our long-term average of 98%. Seems like we're going to settle out somewhere in that range, listeners. We've kind of been vacillating around there for a while. So after all this talk of a nigh-on apocalyptic Q2 for earnings, so far at least, we're kind of treading water, par for the course out there. So intriguing stuff. You want to sink your teeth into this for yourselves, see what's popping off in some of the names we're looking at, like, let's say, Adobe after the bell today. We were talking about them earlier in the week, how much juice they're pricing in. They were pricing in $30.15 as of this report. In the past, they moved $21.90. So a heck of a lot of extra juice lurking in Adobe. Is that warranted? I guess we'll find out collectively today. If you want to see these reports for yourselves, because we like you, completely for free, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue our journey right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, it's Thursday. That can mean but one thing, listeners. It is time to unleash the FLOWMASTER. See what he's keeping his eye on for the week. Mr. FLOWMASTER, sir, who is your first victim in your crosshairs this week?
This is actually a current situation. It's a hot one in BTU, which is a little bit of a pun, right? Peabody Energy. I just saw this one print. The biggest hunk was a buyer of 7,000 OCT24 calls a moment ago with the stock 24.14, and those are opening. But there's also buyers of the OCT25 calls for 69 cents, and some earlier buyers of the OCT24s like a minute earlier for a buck 14. So. In fact, it's funny that if you sum up the net delta impact of that, it's running around 500,000 shares right now, like in the last 10 minutes or so, which if you compare it to the average daily stock volume, which is only around 2.7 million shares, is pretty significant. The biggest piece printed on the box, so that's a kind of a negotiated trade, but it's possible that the delta came along with it, but it doesn't look like it to me. So that's the first one, BTU. That one I'm actually going to pull up on my screen and keep an eye on it.
Keep an eye on that one, listeners. We'll keep an eye on it ourselves. Of course, you mentioned Peabody Energy, listeners. Coal mining company out of St. Louis, trading 24.16, up about 95 cents or about 4% today. So a nice pop for them today. On the year, kind of treading water until recently, actually. They were trading $23.19, almost exactly a buck lower. So net, they're up about a buck on the year. So they're popping about a buck, and they're up about a buck. So all of this year's movement came today, apparently. Even though they did have some more action in between, they rallied it up to the high for the year of $32.89 back in late November of last year. Then they kind of slowly crushed it back down. By the time we got to May of this year, it hit its low for the year of $17.71. So if you want to look at it post-May, coming up on 7 handles there. So not a bad rally from May on, including today out there. So kind of a tale of multiple charts here over the past year. Mr. Meatball, did you notice this upside palooza here in BTU, and what are your thoughts, sir?
I didn't, but I'm looking at it now, and yeah, the stock is it's having a nice day, and yeah, they're buying they're buying SEP, they're buying a lot of October, as Henry pointed out, buying those at the money and just out of the money calls. This thing, it's about to buttress against the 200-day moving average. That's going to be some resistance, but it breaks over that, then it could make a run at 30.
That it could indeed. Listeners, you like these? Hit us up. Let us know as we keep on rolling into the FlowMaster's next victim this week. Listeners, going back out to the cruise lines, in particular Royal Caribbean Cruises, ticker symbol RCL. Haven't talked about this one in a while. Trading $99.32, up nearly $2 today, or about 2%. Nice little pop for them today. Interesting. On the year, we have a nice pop for them as well. $48.94 a year ago, so they're up about $50, or pretty much doubling on the year, listeners. Not a bad run. They pretty much popped it all the way up to the end of July 27th. It hit $112.95, and that was the high for the year. So since July, they have drifted down back to 99.5, but still net on the year, it's been quite the banger year. You can't get mad at an underlying that's doubled over the course of the past year. And Mr. Flowmaster, sounds like RCL may be poised to make another move today, sir. What did your eye of the Flowmaster spot today?
Well, rather than an odd block, this has just kind of jumped out at me as just heavy call volume. This is 10-1 calls to put, so almost 80,000 calls against 7,000 puts. So all the flow is on the call side. I believe there were upgrades on Royal Caribbean and also Norwegian this morning. And these stocks, they're up pretty strong, but they've still been pretty beaten up over really since COVID. I think pre-COVID, these stocks were still almost 50 or 60% higher than they are today. And I'm looking at the trade, the big trades. They're basically spreads. The biggest one was the October 95 to the April 105 call diagonal, printed on the ISE around 11:15, and I'm just trying to triple check. It looks to me like that the paper was selling that call spread, but what that means is they're buying back the Octobers and selling the April 105, which I think might mean that this was a call sale or a call right that is kind of painful. So it's one of these things where I think I think somebody might be stuck in a short call position that's pretty big, because we're also seeing the OC 90 to the April 110, and it looks similar, I think. So, on a name like this that was a good chunk lower, if somebody got shorted and now they're just kind of trying to salvage a position after the stock's come a pretty ways higher, it's an interesting one. And I don't know, my Schadenfreude instinct is to try to take advantage of the fact that they're probably feeling some pain.
Dive it in there. Look at you, to exploit all things. Mr. Meatball, sir, have you noticed this paper going up out there in RCL? Is this a name that has come across your own flow analysis recently, sir?
Yeah, it is. Leisha, I don't think she's been on the show yet, but you should get her on a Pro Trader at some point. She's been long this one. She see it to kind of potentially make a pop. It's starting to threaten that 50-day moving average. It gets there, and this thing could go higher. Yeah, this guy or girl looks like they closed some October that they aided on and rolled out to April with a nice little call spread, looking to, as Henry said, salvage a a trade that is not going in their favor.
All right. One of the reasons we bring the FLOWMASTER on every week, listeners, is to parse some flow, and he's got some in store for us this week. Looks like, Mr. FLOWMASTER, you've been crunching the market share out there for everyone's new favorite product, zero DTE, sir. What's catching your eye out there on the zero DTE flow front, sir?
Well, this is it has been the story of the year for sure. And actually, SIBO has a new market strategist, Mandy Zhu, started, and she put out a paper on it. But so I used this was a fun experiment. I used the Trade Alert API to pull the volume per expiration for the main index products that have them, well, index and ETFs, which are SPX and SPY and NASDAQ and Qs. And they also exist in some of the minis, the XSP and the XND. And what's interesting is if you look at the trend over time, it really continues to actually lift a little bit. NASDAQ right now is running 54% of their option volume is zero-day contracts, the things that expire today. And SPX is around 48%, but we've seen a few days where it was around over 52, 53%. And then it's a little bit lower in the XSP and the XND, which is very, very quiet mini NASDAQ contract. But, we keep digging into this flow and trying to talk to people that are trading it. And, there are the condor sellers that you hear about, these premium sellers that use some systematic tools and discipline strategies to basically kind of methodically sell premium. But there's also a whole contingent of people that use them for this precision hedging, they call it, event hedging. When I was at MIT, schmoozing with the Nobel laureates, I actually asked Myron Scholes, I said, what do you think about the fact that, half of the SPX option volume on some days is zero-day contracts? And he thought about it and said, it's he commented that there was a battle at the beginning of listed options to convince people that it was not just gambling. And he kind of said that we must have come a long way because some of the dynamics of these zero-day contracts, they're so fast, right, that they can feel like gambling in some cases. And I think he was kind of pleased to see that, people really are still treating these as, hedging instruments, speculative instruments. There's multiple use cases. And so I'm just trying to keep an eye on this trend and, the real question is kind of how big can that zero-day activity be? And then you get a lot of people speculating about whether there's gamma impact. And there's some neat studies and people working on the second-order Greeks, right? So as time passes, how does the delta change of positions and everything else? So it's a really hot topic this year.
Very much. The Journal adding fuel to the fire this week with their big article with a giant lottery ticket on it, saying, it's pretty much just playing the lottery out there. So very, very much diving into this fray as well. If folks want to see this data for themselves, are you putting this out anywhere, Henry? Can they see this?
Not yet. It's in the Trade Alert platform. You can see the flow by expiration for a single product and also for a grouping. So it's easy enough to keep an eye on that way. But I'll try to figure out if I can put this somewhere that people can get at it.
We're teasing people with all this awesome flow. They want to see the good nuggets for themselves out there. Mr. Meatball, obviously this has been a hot button topic for a while. Zero day. I'm sure you saw the big article. I'm sure it caused much consternation.
Yeah, it was interesting.
This week. What are your thoughts on that? And also the data Henry's shown us here about the various flow across the products in zero day, sir.
One of the things I did an interview with Jem. I'm sure you saw this on Twitter. I did an interview with Jem Carson last week, and one of the things that he talked about was the fact that with interest rates as high as they are, we're seeing a big pop in structured product use where, you get a yield and then you sell volatility risk premium and the banks are just swallowing this stuff up. And then now, so they're using short dated options to try and kind of pay some of that carry. He also talked about the fact that, what zero DTE is kind of causing near-term volatility to really be muted, and that it's going to be muted until it's not, and that's kind of the situation that we're in here.
You know what's never muted, though, listeners, are your questions, your comments, your feedback. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Your questions, your comments, your insights. Looking at our chat, they're debating zero DTE as we expect right now. Obviously, a very contentious issue. Nichols saying he's not sold on zero DTE yet. Options Queen agrees with him. I can see where you two are coming. Our audience has kind of been interestingly split on this issue for a while now. Whenever we poll you guys on Twitter, Age Del Aquarius, I still think zero DTE options are gambling. I'll keep my mind open to be persuaded otherwise. There you go. Always good to be open-minded. He also said he has a friend of mine mentioned they wanted to learn about futures, so I sent them the link to TWIFO. Any content on Options Insider is heads and shoulders above the rubbish spewed on Reddit. Well, thank you for that, Mr. Age. We aim high here. We aim to be better than Reddit. It's a low bar, but I think we can cross that. But thank you. Thank you for sharing the word with your friends and fans. Hey, if you like what you hear, listeners, share the love. It's always fun. We've been doing this for a long time. It's hard to believe there are new listeners, but they're out there. We all see them. There's new people discovering. Look at this zero DTE flow. It's so many new people are discovering the options market literally every day. So you probably have an aunt or an uncle or a cousin or a brother or a friend who you probably talked to a couple years ago, talked about options. They would probably said, I don't care about that. Maybe now they're probably a little bit more intrigued. So lure them to the dark side here of the old network. Speaking of the dark side, our questions of the week, the dark side, I don't know. I think they're kind of fun. Last week, we asked you folks, we had a fun one last week. We did the kind of whole shortened holiday week, Nikola versus Oatly, because they were both trading around $1.20. Gun to your head, which one would you rather buy? I think begrudgingly over half of you chose Oatly. It seems like that was the right choice right now, but only just barely. Both names have been annihilated since we posted that. I think Nikola got down to 80 some odd cents last I checked, and Oatly was around $1. So they both have lost value, but Oatly has lost less. So I guess by that logic, Oatly is the better of the two. I don't know. Either way, yeah, that was just a little bit of fun. This week, we're back at it, listeners. Again, zero day, just kind of keeping with the theme everyone's obsessed with right now. We said zero DTE is clearly popular with index options traders. Look at the flow Henry just put out there. It's obvious. It's all index flow right now. But the question everyone has for us, so we're putting it to you this week, is what's next? Where are we going next? Which product or market or complex should list zero-day options next? I had a good debate or discussion about this with the Once and Future Dr. Vix last week on TWIFO about energy options. So check that out if you are intrigued about the prospect of zero DTE and let's say nat gas or crude oil, listeners, because it was an intriguing discussion. But our topics for this week are selections for you are stocks, so you know your Apples and your Teslas, all those names you normally trade, or your commodities, so getting into energy, or it could be ags, or it could be gold, whatever you like out there, or crypto, so your Bitcoins or your ETHs, or volatility itself, could be VIX, could be VXX, pick your poison out there, whatever you like. They all have their obvious appeal. They all also have huge drawbacks to listing zero DTE. So there's a lot of push and pull with each of these. Let's go around the horn. Let's go to Uncle Mike first. Uncle Mike, I know you are our resident zero DTE aficionado. In fact, when I hear zero DTE, my first move is always to contact you and see what you think about whatever's going on, because I know you love this stuff so much. So, sir, what is your vote of our 4 selections here? And then B, more importantly, what do you think our audience is voting for?
I'm going to still stick with what I said earlier in the week, equities and equities. I think they'll find a way to make it happen in terms of the I know the concern was that we talked about on Monday was that just it's not there, technology is not there yet, or we don't have the ability to do it unless they go with cash settled equity options. But I think the exchanges are going to find a way to go with the cash settled equity options in some way, shape, or form. And I think they're going to make that happen because I think the demand for such things is very good. And if the exchange really wants to become aggressive on this and make this happen, perhaps they should get cash settled equity options and somehow give them 1256 treatment. Ooh,
what?
Let's do that.
Oh God. Now we've gone down the rabbit hole, sir.
I know I'm grasping at straws and I'm a pipe dreamer, but hey, I'm a dreamer. What can I say?
Mike, I'm gonna have to come visit you.
Yeah.
Henry's our resident SIBO guy here, and he's like, no.
I mean, the problem is if you add 1256 to equities, then the federal government's going to come in and just wipe out the exception for everybody. It's a lose-lose if they do that. They don't want to see all that tax revenue disappear. Are you kidding me? But I like I said, I just don't see it. I don't think it's going to happen. I think the single day equity is just slightly more realistic than the options trading after hours in equity options. That would be my take.
So your answer would be no for all of these. None of these are suitable for zero.
None of these. None. Zero.
You just
zilch.
missed your
Maybe
cold
Bitcoin.
water.
That would be the only one
Ooh.
where I could see something like that working because it's such a Wild West rodeo show over there.
Kind of is. What are our listeners? What are our crazies choosing?
They're going equities because that's what they want, but it ain't going to happen, folks.
Oh, the cold water man. Again, Mr. Henry. Talk some sense into both of our people. First, Uncle Mike going off the 1256 deep end, and then Mr. Meatball just throwing cold water on everybody. What do you got for us, sir?
I'm afraid whatever I say, somebody's going to call me from our corporate policy department. It's a dangerous territory, as Mark said. I'm going to guess that the audience is interested in. They probably are interested in single stocks. I have to agree that the nastiness on after-hours movers really disadvantages retail traders who don't have the same kind of access to contrary exercise that actually market makers do. So I don't think that's a great idea. It does already kind of exist in SPY, and there's already some kind of challenges there. So I'm not a fan of them in the single stock world. I think that there might be some, the thing with 0 day and SIBO's spent a lot of time kind of trying to make sure that, are people using these things responsibly or at least are most people using them responsibly? Because, there's nothing wrong with speculation. That's part of the market. But, the thing about SPX 0 days is they really are perfect for hedging things like, payroll numbers and CPI and Fed day and everything else. And I think some of that might make sense in maybe energy, when you do have some statistics that kind of, can result in dislocations, and the 0 day options kind of give you a nice way to hedge against a dislocation or speculate, on one if you think you know more than the market does. So, but yeah, we can't stay away from the 1256 conversation just because it's, like Mark said, it's a big, messy government, CFTC, SEC mix of regulations and policies, and a lot of people scrapping around there.
A lot of scrapping indeed. Let's go out to your question. Let's see how scrappy they are, listeners. Actually, this one came into our boot camp show yesterday, Mr. FlowMaster. But I saw this. I thought this would be a good topic for the FlowMaster as well, because he is analyzing the flow all day long. This came in from Lambert, or perhaps if he's French, Lambert. He says, is there a particular time of day that is the best or most popular, or you just prefer to trade your options? I weighed in on this a little bit yesterday on Options Bootcamp. But Mr. FlowMaster, you're crunching all the data day in, day out. What do you have to say here for Mr. Lambert here? Maybe you can crunch it a couple of different ways in terms of where are you seeing the most flow, what are the pockets there, and then B, if you have your own personal thoughts on when you want to trade, have at it, sir.
Yeah, I mean, it's actually a good thing to put some thought into because a long time ago, we were trying to do forecasts of daily volume so that at 10 a.m. we could basically say, is the market active or quiet? And so what we do is we calibrate a function to basically know what percentage of the flow usually trades per minute over the 415 minutes of the day. And it tends to be a little quiet for the first half hour, then it's busy from 10 to about 10:30, and then in the middle of the day is a little bit quiet, and then the end of the day is very active again. So when you're trading, you don't really want to step into kind of a moment of light, liquidity, right? Because you are going to have to pay a little bit more of a bid offer to spread to put on a position. So I kind of think, and a lot of people sit it out until 10 in the morning just because I mean, I think you guys have seen this, right? There's actually a funny blip every day where the markets widen out right at 10. And then they go right back to kind of normal at 10:02, and that's because a lot of the the participants know that economic numbers tend to come out around 10. So rather than trying to figure out which day they should kind of back off around 10, they just back off around 10 every single day. So I'm a fan of kind of timing your trade just to maximize liquidity. So, between 10 and 10:30, I think is a good time. Sometimes you see some of these dislocations around 2 o'clock or 3 o'clock also. The myth, I guess, is that that's when margin calls are made. I don't really know how true that is anymore, because I think nowadays most brokers just kind of auto liquidate people. It's not quite a 2 p.m., the phones start ringing. But I actually think there's still a little bit of that out there. So, the funny thing about the 0 day, and I agree with what Sebastian was saying in terms of and what I guess Jem was saying, that the predominant flow in there is typically kind of premium sellers around 5 or 10 or 15 points out of the money, and then they might be buying options further out than that to cap the risk. But that does kind of dampen vol a little bit, at least in kind of the near end of things. But you can look at the day and seeing the kind of day that we're having. If we do get a big outsized move, right? If the straddle opens up at $20 and then we've moved 40 handles like today, you can kind of anticipate what sort of flow might be hitting, right? People that are short these calls that are, $30 out of the money. In some cases, they are going to kind of have to decide, and in some cases, they're just doing it by rule anyway. You can kind of anticipate which way the order flow is going to go. So I think and then on top of that, there's a whole study into the volatility effects across the day, right? So, most of us, look at vol in terms of daily moves, and then, we say, okay, well, a 16 VIX means that it'll move, 1% a day is one standard deviation kind of thing. But there are people digging into, well, actually, it's a little bit more volatile between 10 and 11 and 3 and 4, and that's consistent. And then there's seasonal impact too. So there's some interesting stuff to dig into there, I guess, is my advice for Lambert. But when you're thinking about putting on a trade, you kind of do want to hit the market when it's liquid.
Mr. Meatball, Mr. Uncle Mike, anything to add there on maybe in terms of your preferred time of days to trade?
Yeah, I mean, the first half hour is like amateur hour. I agree with Henry. And, we do have one thing I would say is right around lunchtime, I call it the midday meander. Everybody goes away, and especially on a down day, you'll see the buy the dip crowd try and rally the S&P 500, and they're usually able to rally it until they get back, the powers that be get back from dining on filet, and typically around 1:30 Eastern time. I don't know, Henry, when do you go and have your fancy filet lunch? Is that usually between like 12:30 and 1, something like that?
I have my first lunch at 11:40, and then I get my second lunch around 2.
You're a hobbit. 6 martini lunches.
But, that period of time is an interesting time to look at going long, and then taking that off as the crowds get back from their repast.
I love your mental image of everyone just leaving to eat fillets and drink martinis
with their top hats on.
Yes, and their canes and their walking sticks.
Bunch of Monopoly men.
Yes, exactly, Mr. Monopoly man. I forgot his name there. Really quickly, we got a question coming in on the chat. An interesting one. This comes from who is this? Nichols. Nichols wants to know: have we seen or heard about? We have any thoughts about this new 0-day ETF that is launching today? And yes, this just breaking this morning. The Defiance ETFs. They're launching QQQY, which is the first 0-day ETF. They're going to be writing 0-day options on the Qs out there. So intriguing. That's all I see about it right now. I haven't had a chance to dig into the strategy. I'll have to look into this. But have any of you heard about this? Any thoughts on the first of what I presume to be many 0-day ETFs to come?
I'm going to look at it right now.
Yeah, I had just heard about it too. But our chat, as usual, ahead of the game out there. So yes, it's from Defiance ETFs, as they put it, a leader in thematic ETFs. I am not familiar with them. I don't know what other themes they have explored. But there we go, listeners. They say with daily options at the core of these products, we're seeking to unlock a new dimension of income generation within the ETF space. So there you go, beating everyone else to the punch. I don't know what they're writing. Is it defined risk condors? Are they owning Qs and writing dailies against it? I don't know what they're doing here. But I guess it's worth checking out. So who brought this to our attention? It was Option God. I'm sorry, I apologize. Option God, well done. You surprised everybody with this one, which is good. We like when our listeners are ahead of the curve. You folks are a great bunch. As we keep on rolling, time for us to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, but yeah, we'll check that out, Option God, and we'll probably come back next week when we have a little bit more time to analyze it and get a little bit more flow under our belts and see what they're actually doing. Coming into the end of the show, we are seeing the vol decline continue. VIX actually flirting with a 12 handle ever so briefly a few minutes ago, 1297. It is back to about a 13 handle right now, but still pretty much hanging out right where we were at the start of the show. The rally still pretty much in full effect. We are up about 0.85% to start the show. We're at about 0.82% right now. So still looking pretty frothy out there. Let's go around the horn. Let's go out to Uncle Mike, sir. What are you keeping an eye on until our Monday episode?
Well, first off, Milburn Pennybags is the name of the monopoly guy, also known as Rich Uncle Pennybags.
I knew he had a name, yes.
So, but yeah, just keeping an eye on 4,500 for the S&P, seeing where we're going with that, and then continuing to be entertained by the politicians creeping their way back into our markets as they will in the near future.
Yes, joyous. Look, we're gonna pine for the days of the Fed, Uncle Mike, pretty soon. Like, remember those days?
No kidding.
All we talked about was the Fed. And Mr. Meatball, what are you keeping an eye on until the Monday episode, sir?
I mean, tomorrow is quadruple witching. I think that's going to be interesting. That's going to free up. It's a pretty big expiration. I think it's like $2.5 billion. So that is going to be a pretty interesting one to watch. I'm keeping an eye on Apple. Is that one going to get off the mat? And keeping a general eye on oil. Oil briefly getting to $90 a barrel today. The refiners are just taking off. So I want to kind of see how far that thing can go into Monday's show.
And Mr. Flowmaster, sir, what are you keeping an eye on until your next appearance next Thursday? A, and B, how excited are you to have a 0-day ETF to sink your teeth into?
Well, I have to thank the Option God for mentioning that, and I pinged somebody internally, and they said, "Oh yeah, we're already talking about that." So I want to see. I mean, obviously, the question is really kind of what are they doing?
Yeah.
I suppose if you're owning Q and just writing daily calls, it'll work. If they're getting more complicated than that, you kind of always have these issues where these ETFs can't handle going to below zero, right? Which was the whole issue with Volmageddon. So I'm interested to see how fancy they're getting, and then obviously if they're going to do it in the 0-day Qs, are we going to see something using 0-day SPX or XSP? So I think it's interesting. I mean, I'll tell you one of the biggest, actually what Mark was saying about these defined outcome ETFs, these ETFs that and structured products, same kind of thing. That's the other big wave for the last year is kind of every successful ETF out there that's just like, okay, we buy whatever this sector, or we have some sort of intelligent approach to picking a portfolio. Everyone out there is like, okay, well, now let's do a version that's a buffer protect, where we also buy a put and sell a call to finance it. And there are people that love that risk profile, right? They don't quite get the full amount of upside, but they can go to bed every night knowing that they have a downside hedge on. So, these things are exciting, and then there's a few different flavors of each one. So you really could see basically the universe of ETFs like quadruple, just because if you could buy SPY, then you could buy SPY that's collared, and oh, by the way, you can also buy SPY that's collared with a put spread, and maybe you can buy SPY that also has the kicker of selling short dated. So there's a lot of creativity going on there, which I love.
Yeah, I mean, if only the CBOE had enough benchmarks for people to peg against their strategies. Oh wait,
we got those.
You got those.
All right, listeners. Unfortunately, that music means we got no more show, at least for you right now. But don't worry, stay tuned. If you're listening on the pro side, we'll be back in a little bit with Twyfo. I just realized, too, we were talking about that question from the Options Bootcamp, but that was for the show that only our live members heard yesterday. You'll have to wait a week on the on-demand side for that to hit the Bootcamp feed. So if you hear us talking about a question, I say I'm going to ask the FlowMaster on next week's show. We're talking about it today here, so don't get confused. But that is going to do it for the show today. Back around the horn we go. First out to the Uncleist of Mikes, Mr. Uncle Mike, sir. If folks want more Uncle Mike in their lives, maybe they have questions about more Monopoly-themed characters and their names. Where should they go? What should they do?
Well, come to the St. Charles Parade in the spring for St. Patrick's Day, because I'm actually going to be dressing up as Milburn Pennybags and throwing out promotions for that in the parade. So if you want that, come there.
You're dressed, you have a costume of this guy?
I do. I'm getting a monocle and everything. I'm all excited about
we
it.
Need
so
we
at
very least need a photo of that on social media that we could share, sir.
No question. But anyway, if you'd like to learn more about me as a financial advisor, feel free to check out my website, stcharleswealth.com, or follow me on Twitter at Mike TOSAW, TOSAW.
I ask you, listeners, if your financial advisor doesn't dress up as Milton Moneybags or whatever his name is he really worth his salt? I say no. At Mike TOSAW on Twitter. Hit him up. Stay tuned for that photo. That's going to be a good one. And Mr. Meatball, sir, where should folks go if they want more goodness in their lives?
Go to optionpit.com. I was just talking about, wrote up an article about how cheap that September future was and kind of how I'm playing it. And you can read all about it at optionpit.com.
All right. And last but not least, Mr. FlowMaster, sir. If folks want to check out all your tasty flow and maybe parse it for themselves, where should they go? What should they do?
SEBO.com/RMA stands for Risk and Market Analytics. You can request a trial. You can check out LiveVol Pro, Trade Alert, SEBO Stylex, FT options. We got good stuff and good data at SEBO Data Shop. So come on over.
Got to say, with all this zero-day stuff hitting all the time, flow getting more and more important, you need a tool like the FlowMasters to help you analyze it all. So check it out. Start your journey, SEBO.com/RMA. It's going to end our journey for the option block. Back in a little bit for all of our live folks with This Week in Futures Options. For all you on-demand folks, of course, they'll be hitting the feed later today. Then back again tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. The once future and present Dr. Vix will be joining us to give us the whole lowdown, the whole skinny on the Global Volatility Summit. So if you missed it, we'll break it down for you there on the show tomorrow. After that, for Options Oddities for all you pro folks, then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.